2020 was one of the worst years by far. I don't even need to present any statistics or numbers. It's just common knowledge, everybody knows. What's surprising is this: as reported by Acorns, 1.7 million Americans became millionaires in 2020. Millionaires now make up 8.8% of the US population. That means almost 1 in 10, 8.8% of US adults are now millionaires, up from 7% in 2015. Americans represent 39.1% of the 56.1 million people who are millionaires globally. That's a big deal. Well, actually it's not. Being a millionaire apparently doesn't mean anything anymore. And there are more complicated lessons behind the headline. It took $1.05 to buy in 2020 what $1 can buy in 2019. And if you believe that, that's because inflation was 3.9%. So if you plan to retire comfortably by yourself with a loved one, you need to factor in inflation. And in understanding what $1 million is really worth and consider inflation into that formula. When looking at your portfolio, computing a retirement fund, include an allowance for taxes. You may have $1 million by the time you retire, but what about taxes? How much will Uncle Sam take out of the $1 million? If you take money from a qualified retirement account like a 401k or an IRA, the distribution is fully taxable as ordinary income, except if it's a Roth IRA. Dividends and interest earned outside of a qualified retirement accounts are taxed in the year that it's earned. Remember, taxes matter. This is something you have to think about. Also, you have to consider time. How long do you have before you retire? How long do you think you will have after you retire? How long are you going to live? Those who own stocks are likely to make more money in the long run than those who own maybe CDs and bonds, but it also comes with higher risks. Consider dividend yielding assets. Owners make more money over time than people that are loaning money. Owners of real estate make more money than renters. But consider the responsibilities and problems that come with owning and running rental properties. Lastly, you have to think about bear markets and economic turmoil. The vaccines are rolling out, but obviously we have these new strains. A lot of things are happening. So here's what you need to do. You need to look at all of this. You need to consider protecting your retirement, look at inflation. You need to be prepared if there's another real estate dip. You need to look at your portfolio and say, how close am I to retirement? So look at this, look at stocks, look at all your options, and just be prepared. Be diversified. Don't have all your eggs in one basket. If the stock market's dip, maybe it's a good time to get in and get a good price and get a better deal. Look at gold. Gold is down a little bit from its all-time high last year, so maybe it's a good time to consider gold. It's a great store of value. Because your portfolio might show $1 million by the time you retire, but if you look at inflation, what is $1 million going to be in 15, 20, 30 years? Gold is the one asset that thrives through all economic distress. So give us a call at 877-646-5347. We can talk about gold, silver, send you out some free information, or check out the website at noblegoldinvestments.com.
If you're interested in investing in precious metals and you want to talk to a no-hassle representative that has experience in physical metal, give us a call. Phone number is 877-646-5347. Our phone lines are always open, and we're happy to answer any of your questions.